Hello everyone and welcome. My name is Varun and I work as a product marketer for Zoho Books, a GST compliant cloud accounting software that lets you manage your client finances and also file GST returns. In today's webinar, we will be talking about goods and services tax, also known as GST. While there is information available on numerous sources, there are still many questions lingering in the minds of masses about the GST. And today, with this joint webinar on overview of GST, organized by Zoho Books and Chartered Club, we aim to answer them. I would love to introduce you our presenter, Karan Batra. He is one of India's leading tax experts and is the founder of charteredclub.com. He is an All India rank holder in CA exams and has deep knowledge of taxation system in India. Before we get started, let's take a moment to ensure that everyone is ready and familiar with the control panel of GoToWebinar. You will see the panel on the right hand side of your screen, which you can minimize anytime. If you closely observe, you will also see a chat option in the panel. If you have a question before, after, or during the webinar, feel free to send me your questions. I have also uploaded the presentation in the handout section, which you can download anytime. So, over to you, Karan.
Thanks, Varun, for the introduction. Hi, everyone. I am Karan Batra from charteredclub.com and I welcome you all for this webinar on overview of GST. In this webinar, we would basically be talking about why GST. We would also be talking about what exactly is GST. We would be talking about the benefits of introduction of GST. We would also be talking about the taxes which would be subsumed under GST. Then we would be talking about the various rates of GST, the goods and services on which GST would not be levied, the GST registration process, the liability to get registered, the various components of GST, GST return. We would also be talking about the input tax credit mechanism, the invoice matching concept, and compliance rating. So first, let's start with why GST. So currently what happens is that there are several indirect taxes like service tax, VAT, excise, etc. which are levied. In fact, in some cases, it happens that there is more than one tax which is being levied on the same item. Take the case of, say, restaurants. When you go to eat in a restaurant, both service tax as well as VAT is levied. Whereas on one item, there should only be one tax which is being levied. When there are two taxes being levied, it is not always the right concept. So to replace these multiple taxes, the government is planning to introduce GST. In fact, what happens is with these multiple existing taxes like service tax, VAT, excise, what happens is that the rules for levy of these indirect taxes varies from state to state and the rates also vary from state to state. So take the case in Haryana, the tax rates may be different for VAT, whereas in Karnataka, the tax rates may be different. Moreover, what happens is that the input tax credit of different taxes is not allowed to be claimed against each other. So, I'll try to explain this with the help of an example. What happens is, say for example, there's a manufacturer who produces pens. Now, on pens, excise duty is levied when the pens are manufactured. Then these pens move from the manufacturer's factory to the retailer's shop, and when the retailer sells it, then VAT is levied. So first excise is levied and then VAT is levied. Now these are two separate taxes, as a result of which the input tax credit cannot be claimed. So this was one of the reasons why we thought of removing multiple taxes and introducing a single tax, that is GST, goods and services tax. And you must have seen Mr. Modi speak, one nation, one tax. So We are trying to remove multiple taxes and we are trying to introduce a single tax mechanism, that is GST. So, what exactly is GST? GST stands for Goods and Services Tax. Read carefully, Goods and Services Tax. It would be levied on goods as well as services. Currently, what happens is VAT and excise is levied on goods, whereas service tax is levied on services. But now GST would be levied on both goods and services tax. It will replace all the existing indirect taxes like service tax, VAT, excise. So almost all the indirect taxes would be replaced except a few. We'll talk about those few as well. The manner of application of GST would be the same across India. The rules of GST, the rates, they would be same. So whether you're buying from say Maharashtra or you're buying from Himachal Pradesh, the tax rates, the rules would be the same. One nation, one tax. GST is expected to be applicable from 1st July 2017. The government is working towards it, and most probably it would be applicable from 1st April 2017. So, what exactly are the benefits of introduction of GST? GST will give a boost to the trade and industry because there would be common procedures for registration, for duty payment, return filing, as well as refund of taxes. There would be an efficient neutralization of taxes to provide edge to India's exports internationally. There would be seamless flow of tax credit from the manufacturer to the retailer. Moreover, the benefits of exemption scheme for small scale suppliers will make their products cheaper. So these are just some of the main benefits of introduction of GST. Now, there would be several taxes which would be replaced by introduction of GST. We don't use the word replaced, we use the word subsumed under the GST. Now, what happens is that these taxes are levied by the current indirect taxes, that is VAT, excise, service tax. Some of these taxes are levied by the central government and some of these taxes are levied by the state government. The taxes which are levied by the central government, the tax collection goes to the central government, like excise. The taxes which are levied by the state government, all the tax collected goes to that specific state. So now all these taxes would be subsumed under the GST. The main taxes which were levied by the central government, which would now be subsumed under GST, are central excise duty, the additional duties of excise, the excise duty levied under Medicinal and Toiletries Preparation Act, the additional duties of customs, that is the CVD and the SAD, service tax, and surcharge and cess. So these were the main taxes which were levied by the central government, which would now be subsumed under the GST. As far as the state government is concerned, the state VAT or the sales tax, the entertainment tax, the central sales tax, the taxes on lottery, betting and gambling, the luxury tax, the entry tax, the purchase tax, all the surcharge and cesses, these would be subsumed under the GST. Now, let's talk about the rates of GST. The rates of GST have been defined by the government that these would be the rates. However, which rate would be applicable to which item, that exactly has not been specified. So the rates are 0% for necessities like food grains, fruits. On these there would be no GST. Then there would be a rate of 5% for items of mass consumption. Then there would be a tax of 12% and 18%, which would be the standard rate for goods and services. Then there would be a tax of 28% for luxury items. The items falling in the above mentioned category are expected to be finalized in the next meeting, which is expected to be held in the month of May. Moreover, in case of specified luxury goods and sin goods, there would also be a cess over the peak rate of 28% that would also be levied. So for something like a tobacco, which the government tries to discourage, they may levy an additional tax over and above this 28%. Now, the goods and services on which GST would not be levied. On most of the items, GST would be levied. However, there are certain specified goods and services on which GST would not be levied, and the existing manner of tax would continue to be applicable. These items are: number one, petroleum products; number two, the alcohol for human consumption; number three, the consumption and sale of electricity; number four, real estate. So on these items, GST would not be levied. However, the state will have the power to continue levying the existing excise or VAT or stamp duty on the above mentioned items. GST registration. So, who is required to get registered for GST? GST registration is compulsory if the value of goods sold or the value of services provided during the financial year is more than 20 lakhs. So anyone who has sold goods worth more than 20 lakhs or provided services worth more than 20 lakhs, then he is mandatorily required to register for GST. If the value of services provided or the value of goods sold is less than 20 lakhs, in such cases they can claim the benefit of GST exemption. They are not liable to get registered for GST. In case they want to, they can go and get themselves registered voluntarily. This limit of 20 lakhs is reduced to 10 lakhs for businesses operating in the northern eastern states, in Jammu and Kashmir, Himachal Pradesh and Uttaranchal. Now the entities will have to register separately in which state in which they operate. That is, there would be no centralized registration. So let me tell you with the help of an example. Say for example, I have an entity which has one office in Bangalore, one office in Ahmedabad and one office in New Delhi. Now for all these three offices, I cannot opt for a centralized registration. I will have to opt for separate registration for each of these states. Moreover, the entities will have to register separately for each business vertical. I'll again try to explain this with the help of an example. Say for example, I have an office in New Delhi where I am providing CA services. Apart from that, I am also providing HR consulting services, or I am also manufacturing pens. So for these, I will have to register for GST separately for each business vertical. These would be considered as different business verticals. So first, there would be no centralized registration. That is, if I have offices in multiple states, I'll have to opt for multiple GST registrations. Moreover, if I have multiple business verticals, I'll have to register for each of them separately. Now, liability to get registered. Who exactly is required to get registered under GST? Every person who is registered or who holds a license under the earlier law is required to register for GST. In simple terms, if you are already registered with the service tax department or the excise department or the VAT department, you would be required to register for GST. It is compulsory. Secondly, every person whose turnover in the year exceeds the threshold limit, that is rupees 20 lakhs for most of the Indian states and rupees 10 lakhs for the specified states, which we discussed a few minutes earlier. A person who is not satisfying any of the above mentioned criteria may apply for GST registration voluntarily. It is not mandatory, but if you wish to apply for it, you can go ahead and apply for it. So the main features of GST. GST is a destination based consumption tax. That is, the place of consumption will decide the state that will collect the tax. So if there's a good which is being manufactured in Delhi and sold in Mumbai, so it would be the state of Mumbai, that is Maharashtra, that will collect the tax. This is a tax on supply of goods or services rather than manufacture, production of goods or provision of services or sale of goods. Focus on the words supply. In GST, we will always talk about the word supply. There is also an optional compounding scheme for taxpayers having taxable turnover of a certain threshold. So, in this, what will happen is, say for example, there is a retailer. Now, retailers don't collect the indirect taxes. In fact, in most of the cases, they don't even do the billing. So, in such cases, so as to get these people under the purview of GST, there is an optional compounding scheme which says that if the value of goods sold is less than 50 lakhs, you would only be required to pay a nominal GST of 1% to 3%. The exact rate has not yet been decided. It is expected to be in the range of 1 to 3%. Now, the components of GST. This is a very important thing. The GST is divided into three components, namely the CGST, that is the central GST, the SGST, that is the state GST, and IGST, that is integrated GST. So there are three parts of GST: CGST, SGST and IGST. Which GST would be levied in which case, we would be now discussing. So on transaction within the state, when a good is being sold within the state, both CGST as well as SGST would be levied on the transactions which happen within the same state. The entire CGST collected would belong to the center, and the entire SGST collected would belong to the state. So on all transactions within the state, both the CGST as well as the SGST would be levied. CGST would belong to the center and SGST would belong to the state. So in this case, the tax would be CGST plus SGST. For transactions which are from one state to another, that is interstate transactions, in such cases CGST or SGST would not be levied. It would be IGST which would be levied, and only IGST would be levied. The IGST so collected would be shared between the state and the center. Neither CGST nor SGST would be levied in this case. Only IGST would be levied. Next, let's come to the GST returns. There are 8 forms for GST returns. Let's talk one by one. GSTR 1, that is GST return form 1, is for outward supplies. GSTR 2 is for inward supplies. GSTR 3 is the monthly consolidated return, which would also mention the tax paid. GSTR 4 is return by composition taxpayers. GSTR 5 is return by non-resident taxable persons. GSTR 6 is return by input service distributor. GSTR 7 is the return by the tax collector, and GSTR 8 is the annual return. Now, all these returns are common for all the three components of GST, that is CGST, SGST, IGST. There would be a common return form. GSTR 1, 2 3, and 8 is required to be filed by everyone. However, GSTR 4, 5, 6 and 7 are only required to be filed by the specified category of people. These returns are required to be filed even if there is no business activity. These are required to be filed in all the cases. So GSTR 1, 2, 3, 8 is filed by everyone. So these are GSTR 1, 2 and 3. These are monthly returns. So 3 monthly returns. Every month you would be required to file 3 returns minimum. So that means 12 into 3 is 36 and GSTR 8 is an annual return. So that makes it a total of 37 returns. 37 returns are required to be filed by everyone every year, even if they have not done any business activity. If they are registered for GST, they are required to file it. GSTR 4, 5, 6, 7 is only for a specified category of people and not for everyone. We would be talking more in detail about GSTR in our next webinar. I can also see that there are a lot of people who are joining late for this webinar. So for all the people who are joining late, I would like to welcome you all. I am Karan Batra, the speaker for this session, and this session is jointly organized by Chartered Club in association with Zoho Books. "37 GST returns are required to be filed." We just now discussed that. The input tax credit. Now this is a good concept. How would be the input tax credit mechanism? The input tax credit of GST paid shall be allowed to be claimed as follows. The CGST, credit of CGST would first be allowed with CGST and then with IGST. The credit of SGST would first be allowed with SGST and then with IGST. The credit of IGST would first be allowed with IGST, then with CGST and then with SGST. It is important to note here that CGST cannot be, the credit of CGST cannot be claimed with SGST and the credit of SGST cannot be claimed with CGST. I'll try to explain this again with the help of diagram. CGST can be claimed first with CGST, then with IGST. SGST would first be claimed with SGST, then with IGST. IGST would first be claimed with IGST, then with CGST, then with SGST. This is how the utilization of input tax credit would happen under GST. The input tax credit is available in respect of taxes paid on supply of goods and or services used or intended to be used in the course or furtherance of business. And this input tax credit, for this we follow the negative list approach. That is, all the items on which GST has been paid, they would be allowed to be claimed as input tax credit, except barring a few. Proportionate tax credit is also allowed in case of inputs, input services and capital goods which are partly used for business and partly for non-business purpose. The input tax credit cannot be claimed after filing of annual return of GST or after filing the return for the month of September of the next financial year. The input tax credit of tax paid on goods and or services used for making taxable supplies by a taxable person are allowed subject to 4 conditions. That is, number 1, possession of invoice. Number 2, receipt of goods or services. Number 3, tax actually paid by the supplier to the government. And number 4, furnishing of GST return. Invoice matching. Now this is a very good concept. So currently what happens is when we claim input tax credit, the invoice matching does not happen automatically. So now what will happen is input tax credit would not be allowed if the input tax credit does not match with the details furnished by the supplier. So what will happen is, now GST is a technology enabled solution. What will happen is, first the supplier will upload the details, then the buyer will upload all the details, and all the details would be automatically matched. This is invoice matching. Currently what happens is it is manually matched with the government. Now it would be automatically matched, and in case there's any mismatch, then GST credit would not be allowed. So it would be allowed on a provisional basis for a period of 2 months until payment of tax and filing of valid return by the suppliers. This invoice matching would not be done manually but would happen automatically, and the input tax credit allowed would be reversed in case of mismatch. Now this thing is very important. Invoice matching is a newly introduced concept, and this would reduce tax evasion massively. Currently what happens is a lot of people don't pay tax. With this invoice matching concept, what will happen is that till the time my supplier has not mentioned in his return and paid the tax, I cannot claim the input tax credit. Another concept which has been introduced is the concept of compliance rating. So what will happen is that every person who's registered in on GST, the government will give a rating to such compliant taxpayers, which would be visible to everyone. The benefit of this compliance rating would be that before dealing with any supplier, you can check whether the other person is tax compliant or not. And you would always like to deal with a person who's tax compliant rather than dealing with a person who is not tax compliant, because if a person is tax compliant, then only you would be able to claim the input tax credit, else you would not be able to claim it. In case your supplier does not mention it in his return and does not pay it, you cannot claim input tax credit. So this is a very important thing. Moreover, if a person is non-compliant for 6 months, the registration would be cancelled. So this GST is the biggest tax reforms since independence. Some of the key benefits, I'm just summing it up, is that it will replace all the indirect taxes with a uniform levy. Moreover, India will emerge as one uniform market with equal GST rates across the country. This will boost the GDP, bring down the prices as there will be no tax on taxes. It will eliminate corruption and enlarge overall kitty of taxes. Moreover, the central excise duty, VAT, service tax, auto, luxury tax, etc. will all get subsumed with one GST. One nation, one tax. Now, I am done with the overview of GST. We would be talking in detail about all the aspects like GST return filing process, input tax credit. In a Charter Club, in association with Zoho, would be organizing a couple of more webinars. And before I end this webinar and before we open the session for Q&A, I will just give a takeaway, what is my view and what accountants need to know more about GST or how it will impact them. Number one, what will happen is that the compliances will increase. Just a few minutes back, while talking about GST returns, I mentioned that every business would be required to file 37 returns, which currently is not the case. Say for service tax, it's only 2 returns or 3 returns which are required to be filed. Whereas now under GST, there would be 37 returns which would be required to be filed by everyone. Moreover, the tax evasion will reduce massively because this is a technology enabled thing. And with the introduction of invoice matching, which will happen through technology automatically online, people would not be able to evade taxes. Again, huge reliance on technology, and it is important for all the accountants to know technology because they would be working on this technology. They would be working on a lot of softwares, so they should know technology. With this, we have come to the end of this overview. This was organized by Chart Club in association with Zoho. For all GST updates, you can always log on to charterclub.com, and in case you are looking for accounting software which is GST compliance as well, Zoho has one. You can surely go and check out this GST compliant accounting software by Zoho on zoho.com/books. With this, we end this webinar. I thank you everyone for this webinar, for attending the webinar. In case you have any questions, you can always write into us, and you can right now as well, we are keeping the session open. If there's anything we can help you with, we would be highly obliged. Thank you.
Thank you, Karan, for decoding GST for our attendees. Now, there are a lot of questions coming our way, and we'll be more than glad to answer them all. Karan, adding to your point about technology, yes, accountants will benefit from embracing technology like the cloud. Especially with the GST going online, it's more convenient and cost effective to manage your books online and at the same time push your GST returns into the government portal with a single software. Now, for all the practicing CAs, we have a rewarding program called the Zoho Certified Advisor Program. The program gives you access to a GST compliant suite of financial products. It pays for every client you get to the Zoho environment, and it increases your visibility when we put your details on our accountant directory. For more information, contact Narayanan from our team. You can find his email ID and phone number in the chat box. So that's it, guys. Thank you once again for joining us. Thank you so much, Karan, and have a great day ahead.